for that. And despite today's sell-off, our first guest likes this market, is encouraged about the economy, and likes the idea of a weak dollar. And he says that's the key to stocks going higher. Can't get more straightforward than that. We're pleased to welcome Louis Navellier, Chief Investment Officer of the company that bears his name, a firm, by the way, which manages about $3 billion. Mr. Navellier, we thank you for your time on this Friday afternoon. Let's start with the economic story. This week, we've seen a reaction to numbers like durable goods and existing home sales, which obviously comes after we've had a huge run-up in stocks. Put it all in perspective for us.
Well, what's happening, we're having rotation, actually. The financials cracked on September 1st, and ever since then, growth stocks have been doing very well, especially the large multinationals like the Colgate-Palmolive. So there is a rotation underway. The money's not leaving the market. But between September and May, we're going to have a lot of good news, a lot of easy year-over-year comparisons. We are in the midst of a business recovery. The only wild card is the consumer. I was shocked, frankly, by August retail sales, but the consumer is the wild card, and we hope that they cheer up. But, of course, there's a lingering unemployment problem.
You mentioned the financials, and this evening we're getting some headlines from the group of 20 leaders, specifically that they're coordinating efforts. When it comes to curbing bank pay, what is the likely effect on that, for example, on the banking group?
Well, I know they want to do that in Europe. I haven't seen the guidelines, but that's not going to be very welcome here in the United States. And obviously, your pay shouldn't be curbed if you're not taking government money. So I'm sure there'll be a pushback here of some sort. The
other piece of data that we've seen on confidence is that there are those improvements, and perhaps that works into the story that you're talking about, the fact that stocks have had this nice run-up already, and that home prices have shown some signs of stabilization, and that the net worth, while it went down for something like 7 quarters in a row, actually saw an improvement in the second quarter. Are these the types of things you're looking to when you build this argument for a much more optimistic outlook?
Pretty much so, but I want to be very clear. We are in the midst of a business recovery. Inventories were depleted. Raw costs of goods have gone up. Some of it's caused by the weak dollar, which drives up the price of steel, copper, other commodities. And of course, you got an economic boom elsewhere in Brazil, China, etc. The U.S. consumer is really, really hurting, and we hope that they cheer up soon. I know our Fed Chairman, Ben Bernanke, is calling for what is called a U-shaped recovery, where we slowly crawl out of that hole, but the unemployment problem is still very, very serious. And I've actually come under some criticism for noting that some big companies are starting to hire more foreign workers on temporary visas than hire Americans. All the extended benefits seem to be encouraging some companies to hire these workers on temporary visas because they're cheaper than hiring Americans. So the unemployment situation is the problem, and hopefully consumers will cheer up in the upcoming months. If not, it's going to be a very anemic recovery.
We'll talk a little bit about the U.S. dollar effect on various multinationals, but you mentioned the consumer. What about these consumer stocks that have already had such a big rally off the lows?
Well, we were all shocked by the August retail sales, and just to refresh that, they were up 2.7. If we throw out autos, they were up 1.1. If we throw out autos and gasoline, they were up 0.6. So it did get a little not as positive as you go down, but even 0.6 was a shocker because we had a late Labor Day this year, and had Labor Day fallen close to August, it would have distorted even more. So overall, we were shocked by that number, and there is hope. We're watching consumer confidence like a hawk. There is improvement there. A lot of it is because of what you pointed out, just stability in homes, and the stock market starting to recover. The earnings environment is going to be recovering. The third quarter earnings for the S&P should be up. The weak dollar is boosting the profits of the multinationals and many commodity-related companies.
Right.
And, of course, the fourth quarter earnings will be up due to easy year-over-year comparisons.
Well, we want to come back after this commercial break and talk about the weak dollar effect on stocks and how that affects some of the names that Louis Navellier is liking most right now. That's coming up next here on Taking Stock. Welcome back to Taking Stock. I'm John Ehrlichman, sitting in for Pim Fox. We're talking with Louis Navellier of Navellier & Associates. Investors looking to profit from the weak dollar would naturally look to companies, Louis, that notch strong global sales. Give us some names that you're watching right now.
Well, I love the multinationals. Colgate-Palmolive would probably be my favorite there. It's pretty simple. If you're getting paid in Brazilian real or euros, Australian dollars or Canadian dollars, you know, you've got free money coming in because the dollar has lost 15 to 30% against key currencies since March.
Would there be any reason to like a Colgate more than a Procter & Gamble, say, or?
I like Colgate's last earnings, the last quarter, but I do expect McDonald's to perk up here very fast. They have very strong and steady same-store sales, but the dollar actually affects them dramatically. Procter & Gamble obviously has a lot of great brands, and they're not quite up on my radar, but they're rising.
What percentage of a company's sales need to be overseas for it to be truly a company from a stock perspective that you would look at and say, this is an interesting dollar play?
Oh, at least 20%, and it's usually more than that for the big multinationals.
And the broader the country base, the better?
Absolutely. Absolutely. The dollar is extremely weak against countries with strong commodity business, whether it's a Canada, a Chile, a Brazil, a New Zealand, an Australia. Those have been the strongest currencies relative to the dollar. Even the Korean currency gained over 30% against the dollar.
Now, you also obviously look at companies outside the U.S. when you're factoring in some of the currency plays. Let's talk about some of the other names that you're watching these days. SQM, a Chilean fertilizer company. This is one that you like?
Yes, very much so. In addition to the fertilizer business, they also mine iodine, but it's really a lithium play. The lithium batteries are obviously in our cell phones and our laptops, but they're slowly starting to invade the vehicles. Of course, you can get a lithium car now, the Tesla Roadster, which is an electric Lotus. The BMW 7 Series and S hybrids have lithium battery packs. They're not very big, a little bigger than a normal battery, and they're air conditioned full time because lithium gets a little hot. But they are definitely going to be invading all the automobiles. Of course, the Chevy Volt will be lithium. Panasonic, which supplies Toyota with the Prius batteries, is buying Sanyo, which is a lithium expert. So eventually you might have a lithium Prius, although it would be very expensive.
Another name geographically outside of the U.S. that you've been watching recently, Ambev, the sole distributor of Pepsi in Brazil. What do you look at when you look at these global companies or that are based outside of the U.S.? Do you like the makeup of that economy, the Brazilian economy?
Absolutely. You know, I have a friend who flies a 777 for American Airlines from Miami to Sao Paulo regularly, and he's told me that when he lands in Sao Paulo and goes to the hotel, that just the improvement in the economy is just considerable. You know, you don't see the poverty he used to see in Brazil. I'm sure he's taken a nice route. In fact, he's commented to me that his route from Miami to the airport, there's more homeless there than there is in Brazil. But again, it could be distorted by the route. But Brazil has a growing middle class, a lot of prosperity. They're really working hard to make Sao Paulo a much more livable city, adding a lot of parks and things. But it's a growing middle class there. And of course, Ambev is in the beer business, and their beer sales are very firm.
Pretty steady business. What about other economies around the world that you look at? You like the potential vis-a-vis the economic conditions around the globe, and then set the stage for potential investments in stocks?
Well, let's face it. I mean, China lifted the whole world. They had a better stimulus program than we did. They had direct coupons to consumers, and they went out and spent a fair amount of money. That lifted Australia. That lifted Brazil. China is now Brazil's biggest trading partner. It did help Korea, Japan. Everybody's surrounding. It's doing business with China. Even help Germany and France. And the question is will it continue to spread? And those economies that where consumers are shaken because of the housing problems, whether it's us in the United States, Britain, Spain, Ireland, we're going to be a little slower to recover. But I love the emerging markets, and I really think Brazil has the best demographics of any country.
On a pure percentage basis, do you think emerging markets will outperform the U.S. markets over the next 12 months?
Absolutely. They have better organic growth. They have the currency tailwind underneath them, and they have a big head start. So I'm very, very positive on them.
What are your thoughts, say, for the rest of the year, given the run we've already seen in stocks? Where might we end the year, do you think, say, the S&P 500?
Oh, I think the S&P could easily be up another 18% between now and the end of the year, but here's really where we're at. Essentially, this is earnings pre-announcement season, and I had quite a few stocks up today on a bumpy day, so that's probably because my companies are going to have very good earnings.
Right.
And we've had some analyst upgrades. So I'm very comfortable right now. You'll get some what we call churning in the market rotation, but that's all we're having.
All right.
Then the actual earnings will come out in October. They'll be better than expected. It'll be the first time they'll be up them for many quarters. And then, of course, we hit the holidays, and we get the year-end buying pressure and pension funding that we normally get from Thanksgiving, the end of the year. And then, of course, in January, we get more pension funding. So I really see pretty darn smooth sailing through May. And then the real wild card is, where will the consumer be? If the consumer has not cheered up, it's what we call a W time. We're going to have a double dip. Bernanke again is calling for a U, where we slowly crawl this hole. I'm more in Buffett's camp. He called for more stagflation.
Louis,
we'll see.
I'm sorry to cut you off. It's always great to get your perspectives. Louis Navellier joining us this evening.